The market has hit record highs multiple times over the past 6 months, but are your accounts fully capturing the massive upside we've seen, or has poor allocation sidelined your portfolio? I'm Robert Montes, lead portfolio manager at Nexus Wealth Management, and today we're breaking down last week's market recap covering January 19th through the 23rd. Overall, last week was steady with some gentle pauses, reflecting normal digestion amid news flow. The S&P dipped 0.4%, the Dow was down 0.5%, and the Nasdaq remained roughly flat last week. As far as positive factors last week, these three things really stood out. First was receiving updated numbers on 2025's third quarter GDP, which was updated from 4.3 to 4.4%. This may seem like a small improvement, however, it reinforced the sentiment that the economy's underlying strength remains broad-based and durable. Second was the quick recovery of markets after trade concerns settled regarding Greenland and tariffs. Initially, there was some early worry about trade issues with President Trump's push to gain more control over Greenland, but the president softened his stance midweek, which led to tensions cooling. In this, the stock market bounced back right away as people could focus on the strength of the economy instead of all the what ifs. This kept things from turning into a bigger drop and showed how fast talks and diplomacy can settle things down and impact the market. And third, tech stocks continued to show strength throughout the week, even as investors shifted from tech into other sectors. The ongoing focus on innovation, AI, and utilizing it along new technologies provided a helpful buffer for the broader market, which kept portfolios relatively stable. First was early week trade headline noise tied to Greenland discussions. This sparked some volatility, but the quick walk back in discussions kept impacts contained and short-lived. Second, banks and a few other sectors saw some temporary pullbacks as money moved around to different parts of the market. Now, this type of rotation is totally normal and happens all the time, and as long as the broader economy remains strong, these areas usually recover and regain their footing without much delay. All in all, it's definitely nothing that changes the resilient trend we're seeing. And finally, some investors decided to take profits after those nice recent run-ups we've seen. While also a totally normal, healthy thing to see, it can push the market down in the short term. The key is that it didn't stop the forward momentum or change the solid, resilient, positive trends we've been seeing. So guys, that's what we saw last week in the market. What are your thoughts? Are things going to be all unicorns and rainbows in 2026, or are there major concerns you feel like no one is discussing? Either way, let me know in the comments, and if you want to hear our thoughts and what we see, make sure you tune into our upcoming forward-looking outlook, which we'll post on Wednesday. Thanks so much for watching. Please hit that like button as it helps the algorithms and allows us to reach and educate more people. Until Wednesday, have a great day.